Welcome back to Trading Hour on CNBC TV 18. Well, Indian Overseas Bank is what we're going to look at right now. It came out with the third quarter numbers, looked pretty good. The lender recorded an expansion in net interest margins, posted the highest profits after tax in 30 quarters. To discuss the quarter gone by and the outlook, we're joined by Ajay Kumar Srivastava, the MD and CEO of the bank, who's going to take some questions for us. The NII growth, by the way, was 44% and the profit growth was over 22%. So good set of numbers coming in. Mr. Srivastava, thanks for being with us on the channel. I just want to understand from you, what were the slippages, the exact figure in the quarter gone by? And what is the outstanding restructured book now? Last quarter, I think it was somewhere to the tune of around 6,000 odd crores. Can you give us some of those key numbers and what the outlook is?
Yes, sure. Thank you. Good morning. In fact, I will start from slippage. Slippage for the quarter Q3, it was, to be precise, it was 1,556. And out of this, 50% came from one big account, corporate account, 750 crores. And the remaining 700 crores, out of that, majority was contributed by education loan. The legacy education loan which all banks in the southern part of the country, and IOB in particular, has been suffering. Asset quality was an issue there. So 300 crores from education loan, and remaining were a small agri, MSME, and retail loans. So on the slippage front, there is no concern. 1,556 was the addition, and against that, we recovered around 2,000 crores, and out of which around 450 crores was cash recovery. The total restructured book of the bank is, as you rightly said, it was around 6,000 crores previous quarter also, and the same is continuing. There was some stress in some of the MSME and retail accounts, those restructured accounts. But with close monitoring and follow-up, we have been able to ensure that asset quality does not get deteriorated. And it is maintained at the same level, almost 6,000 crores of our total credit book of 1,75,000 crores.
Okay, so your slippages and your restructured book is pretty unchanged on a quarter-on-quarter basis, right?
Slippages, yes, more or less.
The quantum of slippages at 1,550 crore is similar to what you had recorded in the prior quarter.
Okay. Yes, and this year it was a conscious decision to add more slippages from education loan portfolio.
Okay. Can you tell us the guidance on the net interest margins? Because we have seen a substantial pickup. It stands at 3.27%. Do you think you can hold on to NIMs at these levels?
Yes, the roadmap is very clear. In fact, we want to increase it by another 10 to 15 bips. We want to stabilize at around 3.45, 3.50. And of course, you can see on the screen also, quarter-on-quarter basis, there is increase in NIM by 48 bips, and on year-on-year it is almost 80 bips, 84 bips. So that is how we have covered the distance as far as NIM is concerned, mainly because of increase in our interest income. But going forward, guidance is that we will like to settle around 3.45 to 3.50 on a longer horizon.
Okay, 3.4 to 3.50 is your longer horizon net interest margin target. Got that. What about loan growth? How are we looking over there? Are you seeing growth come back across pockets, whether it's corporate, retail, MSME, agri? And what is the overall loan growth that you're looking at for the fiscal FY24?
Yes, so far, if we speak about first 9 months of this financial year, we have grown by 18%. And growth has been all along in all the sectors. In MSME, we have grown by around 24%. Corporate book has grown by 20%. Retail around 13% and agri around 14%. So overall growth you can see in all the sectors. And one special thing about IOB's credit portfolio is that out of total portfolio, 72% comes from RAM, that is retail, agri and MSME. And 31% comes from corporate. And overall loan book portfolio is like this, only that all these four parameters, I will say, RAM and corporate, it constitutes about 24 to 26% of the total portfolio.
Okay.
So it's very spread.
Do stay on, sir. We're getting some important updates. There is going to be a GST Council meet on 18th of February. So that is next Saturday, where they will consider on the possibility of a rate reduction on cement, as was announced by the Finance Minister. Remember, the current GST slab on cement is 28%. If it comes down from 28 to 18%, Jeffrey says we could see a 7 to 8% cut in customer pricing, which will provide some fillip to the volumes, a minor fillip, but there could be a bit of a fillip, and it will also be positive for pricing in the medium term. So the GST Council meet is scheduled to be held on 18th of February, next Saturday. The exact agenda is still going to be circulated, but the Fitment Committee could meet to decide on the rate reduction on cement, as announced by the Finance Minister. Current slab is 28%. The street is hopeful that perhaps that will come down to 18%. So that's the latest update that we are getting. Mr. Srivastava, just one final word then. Could you give us an indication of loan growth and how things are likely to pan out in FY24 and what we could see in Q4?
As I said, for the first 9 months, growth has been around 18%. It's well above the industry's average growth. We like to maintain at this level the kind of pipeline proposals in pipeline we are having. I think we will be able to maintain this 18 to 19% growth in this financial year. And going forward also, the guidance will be that growth in all parameters, including credit, it has to be double digit, but we will be looking at growing our credit portfolio by minimum 14 to 15%.
Okay, all right, Mr. Srivastava, we leave it at that. Thanks a lot for joining in and speaking to CNBC TV 18. By the way, a lot of stocks are moving up. I just wanted to get them on board. Escorts Kubota is having a smooth run, up almost about 6% right now. Volumes are also picking up on Escorts. Page Industries, despite a weak set of numbers, Page Industries is up almost about 4%. TVS Motor, Naveen Fluorine, all the earlier darlings of the market are sort of seeing buying interest. KPIT Tech, Endurance, IRB Infra, SRF. Generally, when these stocks start to rally, perhaps, the feeling is that perhaps the worst of the market fall is behind. There's a lot of buying on dips that you're seeing in some of these erstwhile favorites in the market. So don't lose sight of that. And a couple of others as well, the likes of GSPL, etc., looking pretty good. So while the overall market may be quiet, there's plenty of buying, especially in the non-index large caps of the market today. TVS, Page, SRF, etc. Let's slip into a quick break. We'll get you more on the markets on the other side. Stay with us.